So across Asia Pacific, we're actually seeing a fair few initiatives being developed, both to promote fintech development, but also safeguard financial stability. In Japan, for example, you have the FSA, they've established a fintech support desk, but also a panel of experts on fintech. In Hong Kong, you've also seen the establishment of a fintech facilitation office and also a fintech advisory group. The MAS in Singapore has established a fintech office as well as a fintech and innovation group to oversee policy. And in Australia, we've also seen the establishment of an innovation hub to assist fintech going forward. But I think there's actually some underlying trends which are important. We're seeing greater collaboration between regulators, which I think is great from a global perspective, number one. But number two, we're also seeing a greater focus within individual regulators on data analytics, for example. And then finally, we're seeing the development of regulatory sandboxes. These are important because they both enable technology to be tested in a relatively benign environment, which is great, but secondly, it gives regulators an inside early view of some of these emerging technologies. Look, I think it's clear that regulators globally have taken notice of fintech's rising prominence. In a global survey by the Financial Stability Board's Fintech Issues Group in 2017, 20 respondents out of 26 actually said that they were taking measures to respond to financial technology developments, and 5 were going to follow suit in the foreseeable future. I think the importance of the regulatory environment cannot be overstated. In a DTCC white paper, we talk about how while financial technology adoption can have benefits, so for example client experience, strengthening infrastructure, but also creating efficiencies, it can also exacerbate certain risks. It can create inefficiencies also in the system. So for example, cyber security threats could be increased. You could also have greater fragmentation if it's not developed well, and also third-party risks, and also things like fraud and money laundering. I think it's early days actually in terms of assessing some of these things, and we're certainly of the view that with rapid growth in financial technology developments, we really need to take a close view of these things, monitor them closely, and also identify systemic risk in particular. We need to do impact analysis. That has to be done on a case-by-case basis, and to that end actually DTCC has developed a framework, and in that framework we really lay out 9 key factors to address or think about when we're assessing financial technology's impact on financial stability.